Hey everybody, good afternoon. It's Brendan Messenger here. Just wanted to give you a quick outlook for 2025 as we're coming into a new year. And I know everybody's excited about all the new things that can happen this year and just hopefully you had a wonderful 2024. Hopefully you had a great Christmas and New Year's season. And let's go ahead and get started today. So we're going to do things a little different today. I'm going to start off with a little bit of humor, and most of you guys uh, may think that I'm business, but I do love to laugh. A lot of things I'm learning as I get older is to learn to laugh at myself. So that's always fun. We're going to go over where is the market heading after the last 2 years of gains, reasonable ways you can save money this year, just some kind of random things we can kind of throw out there for you. Crypto versus precious metals versus stocks, just a little bit of tidbit, a little snippet on that, and then some safe money choices if you have any concerns about this year. So let's get started here. So I have been working a lot on cars lately. I've been trying to get an old 95 Chevy going and just can't seem to get it right. But along those lines, I've been looking up hundreds of videos on how to fix that vehicle and some other vehicles I've been working on. But I like to joke with people that I'm a YouTube certified master auto technician. So when you talk to me, I will find a video that has to do with your vehicle and whatever issue you're having with it. Now, fixing it, I only solve about three-quarters of the things I look at. And then I like to joke, I do have a 15% need to drive this car off a cliff because I can't fix it right. And then for whatever else is left over that I can't fix, I definitely would like to drive those cars off a cliff, but I can't even start them, so it doesn't matter. And that's kind of how the 95 Chevy is right now. I can't start it, so can't drive it off a cliff if you can't start it. So anyway, let's talk a little bit about where's the market heading for after the last 2 years of gains. And basically, stocks have been on fire the last couple of years. So 23, 24. Ironically, in 2023, stocks were up about 24% by themselves, the S&P 500. In 2024, around 25%. So does that mean that in 2025 we're going to be up 26%? Not likely. Large cap and large cap growth and large cap tech, they continue to lead the market. The XLK, which is technology sector, was up almost 21% in 2024. 2023 had a phenomenal year, up more than 40 or so. The Schwab High Large Cap Growth Fund was up 34% in 2024. So once again, large cap just seems to be the place to be. The bond index was down 2.3% in 2024. So a lot of times just kind of breaking even on bonds and some fixed income instruments. And then dividend paying stocks, which a lot of people like to turn to in times of concern or whatnot. Dividend stocks were only up 5% last year. So if you just said, you know what, I'm going to put in, some sort of just dividend only paying stock. I'm not worried about the growth of the company. I just want somebody who's been paying dividends since day one. Stocks like that, on average, were up about 5% in 2024. So the market is close to fairly valued. Ironically, we were here last year. We were kind of around these fair valuations for stocks. Nothing was too pricey, but then nothing was really wonderfully valued, undervalued. So we didn't have a lot of things that we felt comfortable with last year that we were super excited about. But all of a sudden, some various things happened throughout the year, and the stock market just took off. So there are still some opportunities that are out there. AI had a great 2024. Expectations for it this year a little bit tempered. I'm not nearly on board as much of saying, hey, AI is going to have a 100% year like it did last year. You saw things like NVIDIA and Palantir and some other companies that really took off in 2024. I'm going to temper that this year and say that most likely this will probably be a more reasonable year. If they do go up at all, it'll be very modest. We expect this area to contract a little this year, but it's still a good place to be. Most companies are trading close to their normal valuations, so there's just not a ton of value out there, but I have seen several companies that I would consider to be undervalued. Last year there was $6 trillion in money that was sitting on the sidelines in cash. This year there's 7 trillion, so almost 20% more people have taken off and put on the sidelines. So what does that mean? Well, it can mean a number of things. It can mean that people are concerned about the future. It could just mean that they're waiting for an opportunity to buy. We don't know. We just know that that's a lot of money sitting on the sidelines, and people eventually are going to have to put that to work, especially if interest rates continue to kind of do what they're doing and staying flat or even going down a little bit. There's an expectation that interest rates will be cut 1 to 2 times at most this year. So you're going to see that the Fed's going to be a little more reluctant to cut right now. Uh, you're going to notice that your CDs and anything like that that you have of like high yield savings or whatever the case you have that's like a fixed interest rate, you're going to notice that they're not really keeping pace with mortgages. Mortgages are still sitting at like 7% for 30-year mortgage. So really interesting dynamic there, that although interest rates are kind of coming down on the money I'm getting, banks are not really handing it over to me to loan it to me for much less than they were a year ago. So it is getting harder to find good guaranteed rates on investments. All right, let's talk about a few just reasonable ways to save money this year. None of these are really, you know, crazy, outlandish, but they're kind of simple things that if money's tight this year or you're trying to think of some ways to kind of cut some expenses, here's some things to look at. Watch your subscriptions closely. Most Americans are spending over $2,000 a year in unwanted subscriptions, and some of those require like a proactiveness to cancel. If you just kind of look through your monthly statement of what you're spending money on, or every once in a while you're going to see things that may hit your Apple account or things like that, for $100 here, $100 there. If you add all those things up, it's likely you're spending well over $1,000 on just silly, stupid subscriptions that most likely you're not even using. I had to go through recently and just cut out a bunch of people from my budget just because I wasn't even using those products or services. So something pretty easy you can do if you just take a minute to do it. Some folks need to review their electricity plans. The average kilowatt per hour right now is around 12.8%. Check out your electric statement, see if there's anything on there that kind of tells you what your average paid amount was. If it's anything over 12.8, if it's 15, 16, 17, you'll want to consider looking into something else to help you save money there. I've seen some crazy ones that are, after all the fees and stuff were added in, people were paying, well into the 18, 19 per kilowatt hour, which is just absurd and expensive. Another thing to think of, sell some things you don't need or you haven't used in a couple years. Most Americans have an extra 3,000 bucks in unused items sitting around their house. Facebook Marketplace is easy to use. Even if you just want to offload something and have somebody come get it off your property for free, it's amazing what people will come. You can literally find something in your house you think no one will take. Someone will give you something for it, whether it be monetary or whatever. They'll be willing to trade for it. It's an amazing, the marketplace is amazing to be able to just put things on there and get rid of them. Just really, downsize or just get rid of stuff you're not using. The last thing, and yes, I do have a vested interest in this, but it is something that a lot of people have got to consider, is you got to review your insurances. A lot of people, whether it be home, auto, life, Medicare, insurances, a lot of people are just paying exorbitant amounts for things, and insurances have gone up tremendously in the last couple of years. I know, I'm in the business, so I've seen it. It's one thing to consider. In the last 4 years, the average home insurance has gone up over 100%. So it's amazing to think that 4 years ago during COVID, you could have been paying, $1,000 for your home insurance, and now it's going to be well over $2,000 for that same policy. It's always good to just take a look at things, and to see see if there's anything you can do on that. A lot of folks, their life insurances are coming up, that term may be expiring or whatever the case is. If you're still healthy, it's good to look into those, because those terms will go 20 years or whatever the case is, and then they'll renew at whatever some exorbitant rate is. And it may go from $20 a month to $80 a month, or may go from $80 a month to $250 a month. And so you just got to be mindful of those things. If you're still healthy, it's a good time to look into those options to help save some money for you and your family. All right. Let's talk a little bit about crypto, versus precious metals versus stocks, just to kind of give you guys an overview. If you have any questions, feel free to just check in with me on those. So Bitcoin had a banner year last year. It was up over 120%. The things about Bitcoin that folks ask about, it's a pretty hard to invest in security. You got to have a specific platform like a Coinbase or crypto.com or whatever the case is. So you have to have some. There's a little bit of a hurdle to get into these things. It is intangible, but it does have very secure transactions, which make it an interesting play. Not something I'm super excited about, but it is something that is there's a finite amount of them. But it is an intangible. It's not real. You're investing in something that is not. I can't go touch it with my hands. It's just out there in the never land. There's no cash flow associated with it, so it is a pure speculation play. It's not something where you're getting a revenue from it. It's just something where you're hoping it'll go up and hoping it won't go down. Precious metals were up about 22 to 28% last year. Investing in physical versus the account base versus miners. Let's talk a little bit about that real quick. You have physical gold, silver, whatever the case is. You actually own the metal. Some people have an account in which they have gold or silver or whatever the case is. Sometimes that's backed by the physical gold, and sometimes it could be an ETF or some sort of fund that states that it's backed up by some precious metal somewhere locked away. And then you also have mining stocks, which is going to be companies that are actually mining gold or silver or platinum, palladium, whatever it is. And, if a person's going to consider investing in those, they all have their different dynamics to them. But miners, investing in mining companies, not always the best thing. Physical, definitely a good way to go if you're considering that. But you want to make sure you have hands on it or eyes on it at some point. It is tangible, makes you feel like it's worth something. There's no cash flow associated with it, though. I can't buy a block of gold and it provide an income to me. It literally is what it is. I'm hoping it'll go up and hoping it won't go down. So I'm literally just hoping that the next person who comes along who I want to sell it to is going to pay more for it. And there's typically a pretty big spread between what it may say it's worth today on the spot versus what you can sell it for. So if I go down to the pawn shop and take a block of gold, and gold's 2,500 or something today, let's just say, for example, and if I were to go try to sell that, they're not going to give me 2,500 for it. They're going to want like 23 or something like that, because they're going to have some sizable margin that they've got to make up somewhere. All right. As far as stocks, depending on what kind of stocks you own, last year, stocks were up anywhere from 5 to 37% last year on average. These are actual companies, but these are all on technology-based platforms, such as you have an account on a platform such as Schwab or whomever you have, American Funds, whatever the case may be. These are tangible companies. They sell a product. They're real. They actually sell something of use, something, whether it be a phone or whether it be a service, whatever the case is. These companies do have cash flow associated with them. The prices are driven by future expectations of more or less money. So the value of a company, if it goes down, it's because people are expecting it to pay less money in the future than it was today. And likewise, the flip of that is that if I'm expecting that company to make more money in the future, chances are the stock price is going to appreciate or go up in value. So between these three, is it good to have some in each one of them? If you want to totally diversify, yeah, you could have that. Um, yeah, I would say that crypto is by far the most speculative, and it also has the highest probability of loss in any of these. So if you're really wanting to quote unquote gamble, crypto is a way to go. It's a way to take a huge, shot at something. You just don't know what's going to happen. Just as easily as it went up 100%, it could go down 50% in any given year. Stocks could also do that, but the same token, you still own a company at the end of the day. All right. So, what are some safe money choices for 2025 if you just absolutely have some money sitting on the sidelines, or you're saying, "Hey, what can I do with some of the stuff that's just sitting in a savings account over here making 1% over at the bank? I don't need the money." Um, there are high yield savings out there, 3.8 to 4.4% yield. The rates change monthly, so there's no guarantee that you're going to get this all year long. It is what it is. It's going to change periodically. There's a high chance the rates will be within a 0.25 to 0.5% range all year long, up or down. So we would anticipate 3.2 to be the low end. I don't see these hitting 5% again this year, but you kind of have a little fixed area of which they're going to be. The interest is going to be taxable on these if it's not in an IRA, and you're going to kind of see the same thing with CDs and bonds. So CDs, most of them are paying anywhere between 4 to 4.5% for a 1 year. That's if it's non-callable or callable. Non-callable just means that they're not going to, if interest rates go down, you have it for the full year. They can't buy it back from you. Whereas callable just means if interest rates do go down, they can consider buying that back from you and just go ahead and credit that 6 months instead of a year and get the money back from you, and you'll have to reinvest, which you guys have seen me do periodically in your accounts. Those are guaranteed by the FDIC, the taxable interest if it's not in an IRA. Bonds, these are most of the stuff you'll see in your accounts is going to be government agencies. They pay around 5% or so for a 3 year period. Most of them will get called eventually, just because if interest rates stay below that 5% range, they're going to want to reinvest that. Like they're going to want to go refinance that debt, so to speak. Most are AA rated. There's not many corporate bonds out there I'm really excited about. Every once in a while, I'll pull the trigger on a few here and there that I think are worth it. And sometimes those you'll yield somewhere between 5.5 to 6.5. The interest is always taxable on bonds unless it's, once again, a theme here if it's in an IRA. The last thing here, a lot of people don't understand very, very well. They hear the word annuity and they think, oh my gosh, it's an annuity. Why in the world would I ever do that? Annuities have a really good place in a fixed income portfolio of the client. So if you have money that is we're just trying to get a fixed interest rate on it, doing the best we can to get just fixed money. We're not using that money anytime soon. We're just investing for the future. These are a good option. Fixed annuities do bypass probate. So unlike some of these other things that may not bypass probate, they may end up hitting your estate. They do bypass probate. They have rate guarantees coupled with surrender charges that match. So if you get a 3 year guarantee, it's going to have a 3 year surrender charge, 5 year guarantee, 5 year surrender charge. At the end of that period, the money's free and clear. Most people who do a 5 year, so to speak, they don't need the money for the 5 years. And when it comes up, we reinvest it in whatever we need to, whether it be going back into CDs or whatever fixed instrument we need to get a guaranteed rate. Okay. The rates on a 5 year are paying about 5.4%. That's 5.4% every year for the next 5 years guaranteed. So it is a pretty sizable premium to what CDs and bonds are paying, because I can't get any of those to guarantee me more than 1 year. These are A-rated companies. You get tax deferral of the interest. and these are viable for money that's not being used. Okay. If you guys have any questions on it, feel free to email me about these. I look forward to hearing from y'all on these items. So as always, I want to let you know I appreciate you for being part of the Coda Wealth Management family. We're so grateful to have you for another year. Pray that you'll tell a friend about us. Make sure that other folks know. We don't do a lot of marketing. I'm not really big on marketing the investment side of the house out in the community. I like for my clients to just tell one another. That's usually word of mouth is the best referral anyways. So I do appreciate y'all. I hope for a very successful and wonderful 2025. If you have any questions, feel free to email me. Hunter will be checking in with y'all from time to time. And then also, I'll be needing to visit with you at some point in the year, at least once. So I hope you have a great day today, and we'll talk soon. Thank you.